Happy Sunday, traders. Welcome back to another weekly video where we go over some trading setups for the week ahead. In this video, I'm going to be talking a lot about the dollar. I'm going to be talking about some trades that I am currently in, the one that you see on the screen, as well as some ideas that I have looking ahead for this week. Now, of course, this week is a pretty busy one. We have Jerome Powell speaking twice. We have him speaking on Tuesday and on Wednesday, which, of course, anytime this guy speaks and anything to do with the Federal Reserve is going to cause some volatility on the dollar. So if you're trading any of the dollar crosses, including things like, for example, gold and actually the US indices as well, those will probably be impacted by this news. Now, I want to show you guys first just a trade that I am currently in. I am currently sitting in a long position on USD Swiss franc. I took this trade last week inside of the group. Let me see if I can pull that up for you. So this is the trade that I shared inside of the group. Nice jump there on dollar Swiss towards the end of last week. I risked only 35 pips on this trade. There was the entry basically off of the momentum here with the dollar being so incredibly strong last week. I was looking for setups. And of course, got the pullback right around here. Now, price, you can see, jumped up in my favor pretty quick there, but then came back and retested. Now, I haven't been moving my stop loss to break even recently, which is a recent change. I've decided, after doing a lot of testing, really, that through my back testing, I've kind of found that putting it to break even more often was actually hurting my performance, because very often price enters into a range, and I would just get chopped out on a range. So anyways, that's something for another video that I would like to discuss. What I'm looking for on dollar Swiss franc is a break of the highs this week. I'm going to wait to see if we can, in fact, take out the previous highs. If the dollar strength continues, we would expect this area to break, and then I am looking to try and trail stops to continue to let this trade run. Ideally, like I said, I would look to trail stops above this market breakout. So for those of you guys who are already in the VIP service, that is what I'm watching. I'm watching a break of the highs here on dollar Swiss franc for a potential to trail stops into profit. So there you go. That is the update on dollar Swiss. Again, I really like the move here. Real strength coming into the market off of this big move here, which was predominantly based on some news with the Swiss National Bank, which caused a bit of weakness there. And then we saw some follow through opportunities, picked up that buy trade there on Thursday, and have been seeing a nice continuation move since. Okay, so let's take a look at some other crosses. How about euro dollar here? Big move to the downside. Of course, on the 4-hour chart, we broke through these major levels of what was now resistance, what was support. You can see here a major breakout on several major levels of support. We broke out of this area, and that was like our early warning sign. Okay, well, we're retesting the lows, but sure enough, there were so many ample opportunities here for the swing traders out there to get involved. Like I said, I already had a dollar trade open. I was long dollar yen at this time, and now long dollar Swiss franc. So I didn't want to add any more dollar long positions, which would be what the case is. If you're going short euro dollar, you are technically picking up exposure to the long side of the dollar. So we broke out of this level, then we broke out of this level, we even retested. So beautiful break and retest, price action setups on euro dollar. The question is now, what do we do with it? Well, for me, as very often in trading, it is time to just sit and wait, because of course we now have seen a big swing to the downside. I think the sellers have gotten a pretty good move here. It doesn't mean that the sellers couldn't continue lower, but as a seller myself, I would have to see a pullback before I even get interested at all. So the 38.2 spot is sort of our first reaction area, I would say. But then you have deeper retracements in mind that I like even more, like the 61.8%, which brings us back to the break of structure here. Now, if we take a look at the edge finder, what we can see is that the dollar is pretty strong across the board. In fact, if we take a look at the overall bias for all assets, if we take a look at, let's go to score chart summary here at the top, what we can see here is that a lot of dollar stuff here is at the top, and this is huge. So this just points towards more dollar bullishness, as it has been on the edge finder for several weeks now. Dollar Swiss up there, dollar ZAR, dollar CAD, dollar yen, all getting buy signals. And then on the flip side of our software, you can see, take a look at this. We have pound dollar down on a sell. We have gold and euro dollar as sells. So very, very interesting to see. What you're looking at, by the way, if you're newer to my channel, is this is a tool that we use to track the Forex market and to come up with trade setups based on several metrics. Of course, you could do a lot of this stuff by hand, but why do that when you could use software, which basically automates that process? We take a look at the commitment of traders report. We look at what the crowd is trading. We look at seasonality. Historically speaking, what does a particular asset do during a particular month of the year? All of this is valuable information in helping us build a bias. So for example, when I look at euro dollar, we could actually go zoom in to euro dollar and see what's the forecast for the euro. Well, the euro is expected, at least according to our software, it's forecasted to continue to sink lower. And a big thing here is that if we're looking at the score chart breakdown, what you can see is that if we look at commitment of traders data, we still have a very net long commitment of traders report on the dollar. This is telling us that institutional traders and hedge funds are buying the US dollar and holding on to their position there. And then if we flip the script, we take a look at what the crowd is doing. Look at this, you guys. 81% of retail traders are actually long on the euro. So if the euro is sinking and all the retail traders are just buying it continuously and catching the bag or holding onto the bag, that's a red flag that we may actually want to trade the other direction. If we take a look at seasonality shows us the month of September, October, and November are biased to the downside, meaning that over the last 15 years of data that we have imported for this particular asset, during these months, we tend to see a decline. So we can use this information to our advantage, and that can be very, very powerful stuff. And that's why when we trade, we don't trade just pure charts. We trade based on trends and things that we can observe through our data collection phase. So if we take a look at this, again, downtrend expected to continue as it has. This thing has been getting a sell reading on the Edge Finder for weeks now. It's been a really, really profitable run there to the downside on the euro and to the upside on the dollar, and we've been catching a lot of the action. So again, we can keep going. Of course, we've got all the economic data. So if you're interested in fundamentals, this is also played into the Edge Finder, where you have higher interest rates in the US, which is more attractive. You have lower inflation in the US, which is more attractive. GDP growth favors the euro. And then finally, we have unemployment, which favors the US dollar. So again, all of these things taken into account, it gives us a sell reading. It doesn't mean that we just take outright sells, but it gives us a bias to where we could look to potentially set up our technical analysis. So we've done that component. Now we're looking for pullback plays to potentially catch the continuation rally. I hope that makes sense. In the comments, if you have any questions about how that works, basically what we do is we start with a bias through the Edge Finder, and we finish using our technical analysis to place entries, exits, stop losses, all that sort of stuff. Now, right now, we are actually doing a huge discount on the Edge Finder. It is, like I said, it's a tool that we've been working very, very hard on for the last several months, really. We've launched this project. It's been a $100,000 plus investment total for us this year. My team behind the scenes, we build software for traders. So if you'd like a copy, check it out down below in the description. If you use that promo code, the one right here, if you use YTVIP at checkout in the bottom right hand, in the description down below, you'll get access to the tool for a super discounted rate. We're running a really hot sale on this tool right now as we want more traders to use it, and we've actually just released some cool new features. For example, the Smart Money Tracker. So if you take a look at the Smart Money Tracker, I mentioned that we can track hedge funds and institutional traders. Well, we're doing that through the Commitment of Traders report, and you can see it laid out in a beautiful format here. Shout out to the team behind helping develop this. We can see US oil, we have the South African rand, we have the dollar, gold, euro, platinum, NAS 100. We have all these different things pulled in here, and we can take a look at what the Commitment of Traders data is telling us about particular assets. Right now, they're very long oil. They're very long the South African rand. They're very long the dollar. They're very long gold, right? And then conversely, we have the flip side where they're very short the yen, they're very short the pound, and they're very short New Zealand. If this tool would be useful to you, again, take advantage of the sale. Click the link down below in the description and get it this week. This is the best time you're going to get it for a while because the sale is going on and you're going to get it for a discounted rate. And it's a one-time fee. There's no like monthly cost or anything. You just get access to it. You have access to your email and you can access it on the go. We actually added even a mobile version. So you can check out the mobile version, which looks terrible on the desktop, but on the phone, it looks pretty good. So check it out. Again, Link to all of that stuff is down below in the description. Let's move on. Let's take a look at gold, because I know we talked about gold briefly there a second ago, how it has a sell bias. But let's go look at gold. Look at this momentum to the downside and expectations for continued selling here, it seems like, in the short term, with the retail crowd 78% long. So very, very heavy on the buy side is the gold market from retail traders, which is a red flag considering, you know, look at the downtrend, right? We're trending beautifully to the downside. There's been so much money to make on the downside, just trend following here. And, you know, with this break here, this is just continuously looking bearish for gold. And you could see, for me, if I'm looking at this, how do we approach this? Well, let's repeat our process, right? If you guys watch my channel a while, you'll pretty much pick up on what my trading strategy tends to look like. So if we go back to the edge finder, right, we take a look at the edge finder, we say, okay, well, we have a strong sell reading. We could break it down if we want into its components, but we have seasonality, for example, forecasting negative months ahead for gold, at least historically speaking. These are not certainties, these are probabilities, right? We have targets in mind of 1640 potentially. We've already hit our short-term target of 1670. That one has already been hit. And then, of course, we have the COT and the retail sentiment. Again, the crowd's super long in this asset. So if we look at this, right, again, that's huge, because now we have a downtrend. We have reasoning why it's been going down so much. And this 50% retracement looks half decent to me. So if you're a swing trader, right, you might be looking at gold and saying, well, if it swings back up into 1662, that might be an area I want to pay attention to, right? Of course, with the edge finder and with everything about trading, there is no certainties, right? As traders, our job is to play probabilities and to risk small. So even when I have a strong bias, this is not a certainty. A strong sell doesn't tell me, oh, it's absolutely going further down. It just tells me, generally speaking, based on these metrics, this is what we're finding. Then we use that bias. We say, well, is there something set up on the technicals? We don't completely ignore technicals. We just combine them with the data, right? So if you have a technical strategy, but you're like, well, I'm lacking fundamentals and I'm lacking data to drive my trades, that's where the edge finder has come in. And again, been such a key tool. We've had so many people give us a lot of great feedback. So it's been awesome to sort of pilot the journey building this thing. Anyways, gold, again, pullback sells, in my opinion, look pretty dang good. If we continue on, we could take a look at some of the yen crosses here. Dollar yen to start. Dollar yen, huge sell-off with the Bank of Japan intervening last week. This was massive. So what we had was the Bank of Japan basically came out and said, hey, you know what? We're gonna support our currency here, and it caused the dollar yen to drop very quickly. Now, but don't be fooled here, because it is not a certainty that from now on that the dollar yen is going down. It's absolutely not a certainty, because the Japanese yen, you know, is incredibly weak for a reason. And the Bank of Japan, yes, they can pledge to intervene, but it does not necessarily guarantee that the price is going to go down. Please be very careful. There are no guarantees in markets. And sometimes a central bank will say something for the short-term relief without actually meaning it. It's happened many, many times in the Forex world. Just be very careful trusting just because some, you know, central bank says something does not always mean that that is exactly what's going to happen. The dollar is incredibly strong with hawkishness from the bank, the Federal Reserve, right? We've been raising interest rates here in the US, and that is, of course, very attractive for the currency world for the dollar. So if we take a look at this, you know, if you're watching dollar yen hesitantly, maybe a breakout of the previous high would be where you're looking, because now we've sort of entered on the 4-hour chart into this range where, yeah, we had this beautiful uptrend, but we sort of broke that stream to the upside, right? So I was long dollar yen around here. I covered my trade and price just dropped. So I am looking to potentially get long on the dollar yen again. Like I said earlier, I am dollar Swiss. I've got an open position. Dollar Swiss and dollar yen tend to move in sympathy with one another, just because it's the dollar versus two other risk-off assets. But for me, if you're watching this hesitantly, what I'd be looking for is breaks, retests, and continuation plays on dollar yen. I don't love the idea of shorting the dollar yen. There's a really negative swap on that, as the central banks, the difference in their interest rates offered, 3.25 versus negative 1.1. Means that shorting this pair is very costly on an overnight basis. So as a swing trader, I like to long this trade, but I'd like to look for pullback buys after a break of recent highs. That's where I'd be looking at this. Don't blink, because it could happen very, very quickly this week as the dollar maintains such a strong component. Now, if we take a look at pound yen, though, very different story. The pound looking super unattractive, right? And the pound yen, Wow, with the yen coming in like this, we can see just a massive sink to the downside. From peak to trough, by the way, guys, we're looking at a massive, in 12 days, 1,270 pips. This move is incredible. This is what you would call an absolutely game changer move. Can you imagine? Let's just play theory for a second. If you were employing what I generally employ, which is a sell, let me back up. If you're to trail stops like I do, right? Let's say you sold up here, right? I trail stops using market structure. So let me just daydream for a second. If I had sold here, right? Just assuming I did, I'm definitely not in the sell. I probably would have moved stops above this structure, but then since then, there's been nowhere to move stops. We've broken through this level, so maybe you could have made the argument, okay, maybe we move it behind this. But look at this. This is the absolute dream of a sell with a trailing stop loss, because this is the scenario where you just get a collapse in one direction and a massive, massive profit on a trade. So congrats to anybody who is shorting pound yen. You are in the money for sure if you've been shorting up in these areas. So beautiful, beautiful stuff. I mean, pound yen just absolutely falling through the floor. This is what you call a collapse. And again, it's a little bit of yen strength, but it's also just the pound being so incredibly weak. Look at the pound dollar. Oh my gosh, that is an absolute crazy move there. Is that even right? I'm almost wanting to check the other, hold on, pound USD. It is, holy, I had no idea the pound moved that much. Moved 400 pips? Oh my gosh. Sorry guys, I didn't even realize the pound moved. Is this just euro dollar? Okay, yeah, the pound dollar just got smoked on Friday. I knew the pound was down with the euro. I was paying more attention to the euro, but that move is incredible. I mean, that's a massive move for a single day in the currency world for the pound USD. 400 pips. Wow. Anyways, what's the move here? Well, if you're looking at pound USD, my opinion, just absolutely nothing to do with the buy side. There's when I see a move like this does not tell me, oh, buy it, it's a dip. This tells me get out of the way, right? And of course, it could rally back. It's not out of the question. But for me, this is a momentum push to the downside that is very, very scary. So if we're looking at this from a pullback standpoint, maybe the 61.8% retracement. But until then, there's nothing to do. And you're talking about a massive rally. So probably just avoiding pound dollar. But I do want to just say, if you are on the short side of this move, congratulations. This one has been huge. And if we look at the edge finder, this thing has been on the short side for like a month and a half now, and you can see just why, right? Just so much momentum to the downside. This is why we tend to go with momentum, and why our scanner is set up to look for that, right? We're looking for momentum to go with, not to try and go against. Again, remember guys, if you want access to the edge finder, get it today. It's your best chance to get it for a huge discount. The link in the description will get you 35% off if you use that code YTVIP. Get access to it. Come join the crew using it. We've got a community around it, and we'd love to have more people who are using the tool on a day-to-day basis. Thank you guys for watching. Happy trading this week, and we'll see you back next time.